Hi everyone, I'm Yash Sangvi, CA All India Rank 25 and a finance professional. And in this video, we are going to talk about yet another career in finance, which is private equity. So let's get started. We'll follow the same format where I first give you an overview of what exactly does a private equity firm do and what would your day look like working at a private equity firm. Then we'll talk about and evaluate this career in private equity on the basis of the following 5 parameters. First is the ease and route of entry. Second is of course the pay. Third is the work-life balance. Fourth is the peer group. And fifth and of course the exit options. So let's get started. First, an overview and understanding of what the private equity firm does. So let's say you are a very large fund. You are, let's say, a sovereign wealth fund of a country or a pension fund of a certain country, and you have a lot of capital to be deployed. Because you have a lot of capital to be deployed, but you also have a fiduciary responsibility towards your investors and stakeholders, you decide that 90 to 95% of your capital would be deployed in reasonably less risky and stable asset classes, which could give you decent returns. But since you also have the intention that you want to earn exponential returns for your stakeholders and investors, you decide that some bit of this assets that you have under management would be invested in highly risky asset classes, which could also generate extremely high returns for you. So now, because you are the sovereign wealth fund or a pension fund of a particular country, you are not supposed to have the understanding of which exactly could be the asset classes or the companies where you would invest and your investment would yield you the extremely large returns that you are talking about. So what do? You become the financial sponsor to a private equity firm. This private equity firm brings in its own expertise, its specialization, brings in highly qualified individuals who have understanding of particular sectors, and they take this capital of yours and decide how to deploy it, in which companies to be with this capital is to be deployed to earn the exponential return that you were thinking about. The private equity firm's value proposition lies in this. They understand and they can identify which exactly are the companies in the private market ecosystem which have extremely high upside potential and could generate the exponential returns that their financial sponsors want. That is exactly the place where the private equity firm plays. Let us now talk about what will your day look like when you work in a private equity firm. So private equity sits in a very beautiful confluence of two things. Number one is of course the hardcore financial models, the assumptions that you take in making those models, the Excel work, the valuation, the exit multiples that you are thinking of before you are investing in that company. But there's also one very silent but extremely nuanced and important aspect while working in a private equity firm, which is understanding the business. Your role beyond the financial numbers and metrics would be understanding what exactly is the business that the target company is doing. What is the value proposition that they bring onto the table? What exactly do they do which would make the customers pay money for their services? Those are the things that you also have to evaluate as a private equity professional. There are two things which capture the essence of what exactly you do beyond the numbers. One is called the right to win, and the second is called the right to exist. We'll go in fact in a reverse order. First, you have to understand what exactly is the right to exist of this particular company. So for that, you are basically evaluating why would anyone pay for the goods or services that this company is making, which is basically understanding two things. A, whether there is a market for the goods and services that this company is making, and B, if there is a market, how big is that market and how fast is it growing? Because ultimately, any company can grow only as large and can grow only as fast as the target market in which it operates. Those are the two things that you evaluate when you look at the right to exist for any company. Now, let us look at the right to win. This is the next step after evaluating the right to exist. So now that you have concluded, let's say, that this space, this proposition that this company is offering has a value and it is something that the customers would be willing to pay for, you next evaluate the right to win, which essentially means that if in this sector or this space there are 10 other companies, why among those 10 companies is the target company the one which will win, which will give you the maximum potential returns? In evaluating that, you look at the company deeply. You understand what differentiates it from its competitors. That is what looking at the right to win means. So, as I was saying, beyond the financials, the numbers, the valuation, the nuanced aspects of business, understanding the core principles on which the company operates is also one thing which you do on a regular basis in a private equity firm. You speak to the promoters of the companies, you get an understanding of what are their growth plans, what do they think of the market outlook. You also speak to a lot of experts in the field of area in which your target is going to operate, to understand how fast the market might grow, what could be the levers for the growth, and what could be the deterrents for the growth. Those are certain things that you do actively on a day-to-day basis when you are evaluating companies in the private equity space. So now that you have an understanding of what you will do in a private equity firm, let us evaluate this career in private equity on the basis of the 5 parameters that we talked about. So now let's evaluate this career in private equity on the basis of the first one, which is ease and route of entry. Understand that the private equity ecosystem in India, or the private equity industry as a whole, is very small in India. The number of firms you can count on your fingertips, and the number of people working around you in those firms are also very limited. Because this is such a close-knit kind of a group, one thing which they absolutely demand before you can have a shot at private equity is pedigree. Pedigree can come from one of the two things. First is your work experience, and second is the academic history of yours. If you have had solid work experience working in some of the largest companies of the country, doing some impactful work, and it can even be in some of the high growth startups, then you could have a shot at private equity. Or if you have a stellar academic record, if you are top of the class graduating from the top IITs of the country, top IIMs of the country, or you are a chartered accountant who has a rank in his CA final and CA inter exams, then that also could give you a shot at private equity. For someone who does not have either of the pedigree, an entry into private equity could be extremely difficult. Let's now evaluate the pay in private equity. In private equity space, there is certain disparity in pay depending on the size of firm that you work at. So if you start at a smaller firm which has limited capital to deploy, then your pay could be anywhere between 12 to 15 lakhs per annum fixed at a starting stage. But if you work for some of the biggest private equity firms in the country, then your pay even at the starting stage would be anywhere between 25 to 30 lakhs per annum. This pay increases significantly as you move up the ladder, because after a point in time, you also get certain variable pay which is called carry, which is basically a share in the returns that your investments have generated. So in very short span of time, people start to earn 8-figure salaries in the private equity space. We'll now talk about the work-life balance in private equity, which is one of the most at times contested topics, because the experiences here are very varied. I know people who used to work at certain very high demanding careers such as investment banking or consulting, and then made a shift to private equity, who have commented that their work-life balance in private equity is significantly better than what it was in consulting or investment banking. But on the other hand, I have also come to know of people who work anywhere between 100 to 120 hours and on weekends also in their private equity jobs. The jobs, of course, pay them very well. They are in some of the biggest private equity firms in the country, but at the same time, their work hours are extremely grueling. So there's no one straight answer to the work-life balance in private equity. It is very firm specific, and it is better you do your due diligence before you make that switch to any firm in private equity. Let us now talk about one of the most interesting aspects of the private equity career, which is your peer group or your network. In private equity, you can look at your network from two lenses. First, of course, is your peer group, people within the firm with whom you work on a daily basis. These could be people who have joined at your level, people who are at a senior level, could be a manager, could be your managing director, etc. And also people who are junior to you, who will become junior to you once you climb the ladder. On the other hand, there is another side to this network, who are the founders. Since you are private equity, you are the capital provider. You on a daily basis will communicate, speak to, understand a lot of things from a lot of startup founders. people who are building businesses from scratch, and these businesses could be in extremely interesting spaces such as medtech, health tech, fintech, media, entertainment, etc. On a daily basis, you will speak to them, you will understand how they think, the broader perspective of the business, what are the challenges that they are facing, and what are their outlook on the various things that are happening at an overall level. This will broaden your perspective like no other, because there is no substitute to speaking to a founder who is building their business from scratch. This is one of the most valuable things that you will earn from your private equity career, because of course the money is there, but the money is also there in a lot of other careers. This part of it, which is speaking to founders, understanding businesses, evaluating at the very scratch, taking bets on a certain idea or a certain thing which has not even yet been fully conceptualized, that is what makes this career very, very, very different. This is way more valuable than any salary slip that you will ever draw in your private equity career. Now, coming to the exit opportunities in private equity. If you look at the hierarchy of the careers in finance, private equity sits at the very top. So understand it this way. Let's say you are a finance professional who started somewhere in the audit field. You worked there for 2 years, then you made a switch to FTD. You worked there for a couple of years, maybe 2 or 3 more years, then you made a switch to investment banking. Now, in investment banking, after you have had live deal experience working on helping people raise money or helping people get their exits, you now wanted to understand businesses more deeply, and hence you made a switch to private equity. Once you do that, where do you go from there? Because there is almost everything in finance that you have covered in this space. Everything which could possibly involve a live deal environment. So in private equity, once you are in private equity, your exit options can be looked at from two ways. First is the vertical exit that you get, which is basically moving from a small, relatively smaller private equity firm to a larger private equity firm, which gives you maybe better role, better pay package, better designation, etc. And second, and most importantly, could be a lateral exit. In private equity, lateral exit basically translates to one of the two things. A, you either start something of your own in the sector which you have gained experience and expertise in. So let's say you were working in the industrial sector. You worked in private equity in the industrial sector for a good 3-4 years. Now you have an absolute broad understanding of what the sector is about. You know exactly what financials might look like. You understand the challenges that these businesses face and all of those things. Once you have that knowledge, understanding, it gives you a confidence to take a splash into entrepreneurship in that sector. You decide maybe that you want to start your own business, let's say in the industrial sector. Or second option which you can look at is starting an existing established startup as a founding member or a co-founder or in the CEO or in the founder's office role. That also could be one choice of exit for a lot of private equity people. Because for certain people, just investing and seeing their money grow might not give them as much satisfaction as operating something of their own might. And in those cases, people make one of these two choices. They either decide to not work for anybody else anymore and start their own business from ground up, from absolute zero, or they decide to make a switch to one of these startups which are very high growing, which need a person like you who has worked in private equity, understands the sector broadly, has experience in in fundraising and valuation. That could be your exit option by and large. So now basically, if you are someone who likes finance, modeling, Excel, valuations, but at the same time has a knack for business, wants to understand business at a depth, wants to understand which sectors might grow, which might not grow, want to take bet on people who are still at an initial stage and not very accomplished, then you can opt for private equity, but ensure that you have pedigree for it, because that makes your entry into private equity very easy. And be ready for grueling hours which might come your way if you are in one of those firms. On the other hand, if you think this entire thing as a package does not suit well for you, then no problem. There are a lot of careers in finance that I have already spoken about and I might be talking to you about in the future, which you can look at. So don't worry about it. Thank you for watching this video and wait for the next one.